Eric Mother at Mother.com with world market analysis for the weekend of October 8th and October 9th, 2016. Let's take a look at markets here. Pretty much a down session on Friday as far as Asian markets are concerned, albeit slightly down. Let's take a look at how European markets closed on Friday, where the FTSE was slightly up, the German market and the French market was slightly down. Take a look at the Americas with about 5 minutes to go before the close of Friday's session, and we can see Brazil is up, Canadian market is down, S&P 500 slightly down. Let's call it small moves. Brazil with a nice 0.72%. Let's take a look at those world charts. Now, before we get to the specific markets, one thing I do notice here, just like we did observe during last weekend's market analysis, most world markets are stuck in a range, some type of a wedge type formation. Ultimately, we might have to break out to the upside and continue moving higher, or markets are poised to break down for the next swing trade being lower. So even though we are stuck in this wedge type formation, my personal feeling and based on the evidence is I still lean, or I believe more than likely the wedge will break to the downside. So let's discuss the charts and take a look at why that's the case. Let's begin with the Australian market as we always do. After a pullback of recent highs here, market's coming back and seems to be stalling around here, and I think it goes back to what we discussed during the last weekend. So it's this break on the RSI that is being tested. So the break there took place, bring the market off the high. So we're essentially coming back to test that level. I think that becomes strong resistance, indicating that until we can move above this red line, more than likely this is a market that eventually rolls over. So we need a breakout above the red line. Otherwise, we can expect a pullback after a move off recent lows from, let's call it, early September. So one of the reasons why I believe markets are more than likely poised to go lower is based on the two lines we've been drawing the last couple of months. We got topside resistance on the monthly, which has already been confirmed. So until the monthly chart can clear that line, we should still expect a major pullback as far as Australian market is concerned. And also we got this backtest line that has still continues to show resistance. So more than likely this resistance here on the two lines indicates that we've already seen this signal that potentially and more than likely over time markets are poised to go lower until they can clear above, let's say, the blue line, which is the topside on the monthly chart. So until we can move above this line, one can continue expecting the Australian market to pull back. If we take a look at the Chinese market, we can still see that we continue trading in a wedge type formation. Again, lots of wedge formations across the many markets. And there is your US markets closing for Friday, October 7th, 2016. So eventually this market can either break out or break down. We also see similar type formation. When we take a look at the Japanese market, it is also within a wedge that has yet to resolve. And all these wedge formations are connecting recent daily closing highs. So eventually we might have to break out for the next major direction or break down for the next major swing trade. If you take a look at the Nifty, the Indian market, you can see topside wedge formation and you can draw a bottom side wedge formation. So ultimately, even here, this wedge is going to have to resolve one way or the other with a breakout or with a breakdown. So we have to wait for the conclusion of that wedge formation. And here we can see that based on the previous breakout attempt, when the market was trying to move above 2015's weekly closing high, that breakout as of right now has failed. So the breakout attempt is when this market or the Nifty did try to move above 2015's weekly closing high here, and that number was at 8937.75. So that right now looks like a failed breakout, The problem with failed breakouts is that they are notorious for taking markets lower. So the weekly chart is, let's call it stable, but this failed breakout continues to be a problem. Take a look at the long-term monthly chart, which currently is also showing a failed breakout on the monthly chart as the market tried to move above 8844.60 but failed. So the monthly chart and the weekly chart both failed to hold above their breakout levels. That's a concern for market bulls, and as we discussed and have been discussing for a couple of weeks, couple of months, is this RSI formation. So we had the market trying to make a move to new highs. So let's take a look at this. So the market was trying to make an improvement in monthly closing highs. Take a look at where the RSI failed to hold. Keep in mind the RSI is showing resistance right now at a level approximately at 61.8. So that becomes a problem, because if you take a look at where 61.8 is and draw a line and investigate what has happened to the market going back many years, you can see a break below this red line brought the market off the highs of 1994. We broke below this line here for the highs and the bear market thereafter of 2000 to 2003. We broke below here for late 2007 break, and of course we had a 2008 bear market, and here we had resistance on that red line for the highs there and another bear market. And recently we also coming off the highs of 2015. We broke below the red line and now had a drop coming into early this year. So right now we are looking at the same resistance level here. So the monthly chart, in my opinion, that's why I say even though markets are in a wedge, so many markets are in a wedge, it seems to me that based on monthly charts at the current setup, more than likely these markets are going to have to test lower price levels. If you take a look at the South African market, all data monthly, and draw a line again just somewhere around there, and again that line so happens to be conveniently at about 61.8 on the monthly RSI, and you can see the biggest periods when the market was down was here and during this period here. All these drop periods began when the market moved below the red line here for the beginning of this move lower, and we showed resistance and finally broke below this red line for this beginning of this move somewhere here. So right now we've come and hit this level over the last couple of months. We continue to show resistance. My suggestion here is that as long as this is the case, as long as we are seeing resistance right there at about 61.8 over time, this might have to probe lower price levels. Keep in mind, similar to the Nifty, we are seeing the South African market also show that it failed to break out above the recent weekly closing high there. So that breakout attempt failed, as you can see on multiple occasions. It failed here, failed during this week, and a failed breakout attempt there. So that's the backdrop, which might explain already why this market is already coiling down. So net, those monthly charts and a failed breakout represents a situation where the markets are setting, in my opinion, to probe lower prices, not necessarily day to day or hour to hour, but over a period of weeks and months. Take a look at the European markets, and here I have the EuroNext 100 index, and this is good enough to cover the French market, the DAX, and the FTSE, because they have similar looking chart formations. And what we see here is what we've seen in other markets, some type of a wedge type formation. As you can see, just take the recent weekly closing highs, you got that line on the top side, and you take this recent weekly closing lows and you got our nice wedge. So ultimately we have to resolve either above or below for the next meaningful direction. Also the RSI is forming some type of a wedge. You can see this wedge here on the top side and a wedge on the bottom, the line on the bottom side. Eventually RSI breaks out, price breaks out, or conversely, or the alternate situation is a breakdown below the wedge. So since we haven't broken above or below, we have to wait for the market to give us some type of direction by moving outside of this wedge for a move higher or for a move lower. One thing we should be sensitive to is this idea that the euro as a combined market here, the EuroNext 100. One thing we can look at here is the possibility that the market might actually go on to record fresh monthly lows. So if the MACD moves and stays at 3-year lows, that's a negative. And also the RSI is very close to moving to 3-year lows. So the risk here is we have the RSI moving to 3-year lows and the MACD is already at 3-year lows. So the risk is in the chart that with a slight move lower, we might be probing a major sell signal by the RSI moving to 3-year lows and the MACD moving to 3-year lows. Let's take a look at the Canadian market. As you can see here, this breakout attempt above the previous weekly closing high has failed. It's not a good sign. And right now we are looking at the possibility that the market might crack below the recent weekly closing low. So that's a level we can watch for guidance. So we need to watch those two numbers. So in terms of breaking out above the recent weekly closing high, the level to watch there is if the market can move above 14,95795.70. So a movement above that could be bullish. At the same time, if we break below the recent weekly closing low of 14,450.84, which is this weekly closing low, any movement below that, in other words, if the market cracks below the recent weekly closing low, that represents a situation where we can start expecting a true type or a true correction. Now keep in mind the breakout attempt was not very encouraging. As you can see, the market made an improvement here in weekly closing highs, and yet the RSI has been making lower highs. So that type of negative divergence by itself suggests that eventually this market could easily roll over. But again, the number to watch for confirmation of a market that is weakening is a movement below 14,450.84, which would be a break below this recent weekly closing low. And just as we've seen other markets, the biggest risk in this market is the monthly chart already being negative. And here we're going to do the same thing as we've done with the Indian market and the South African market. A simple line. So right there, very simple line, but this line again happens to be at about 61.8. And we can see some of the major moves lower in the market over the last 25 some years have been coming during this period where we break below here for this move in 98. We broke through here for the move in 2000. We broke through here in early 2008. We had uniform activity above the red line and back below it for the sell signal here. We broke below here for the movement of the highs of 2014 and 2015. So right now we are coming back here on the monthly chart. We continue seeing that this is resistance. That's why I keep saying that even though markets are in a range, the monthly charts are indicating at the current moment that more than likely this might roll over to markets eventually having a major multi-month movement to the downside. In other words, a bear market would make sense as long as the monthly charts continue to give us this type of sell signal and resistance around 61.8 on the monthly RSI. If we take a look at the Brazilian market, we can see that right now it is doing its best to break out above 2014's monthly closing high. So we need to watch for that. If it can break out, that could be a sign of a market that wants to go higher. The level we need to watch here is 61,288.15. If it can break out, good. Now keep in mind, if it fails, and we've seen other markets fail to break out, that creates a little bit of a problem. But for now, let's give it the benefit of the doubt. Any movement above 61,288.15 is a good quality breakout. Keep in mind that right now we are looking at the RSI doing its best to move to 3-year highs, which is what we want to see for a quality breakout. And also we can see here that the MACDs are already trading at 3-year highs. So it meets the minimum requirement in terms of a quality breakout. All it needs to do now is stay above this monthly closing high from 2014 and just give you that number again, which should be in the description, 61,288.15. Anything above that and this would be bullish. Now keep in mind, if you take a look at the long-term monthly chart, a little bit of a problem, because in effect what's going on here is the market is coming back to test the top side monthly highs. So it's coming back to test this line here on the monthly chart, all data monthly. That's a problem if it cannot move above this line. Remember, this is a monthly chart, so it might take months to play out. And also you can combine that with the previous break line, going back to this break in 2010 for the highs right there. So those highs came with this break. So we draw a line from there, which is going to be this red line right there. And you can see that every time we've shown resistance, like this period here, let's change colors there. So for example, during this period, there was resistance on the red line for the highs there of 2010. We hit that same level here for the highs of 2014. And now we are coming back to test this red line. Again, keep in mind where the RSI is trading. RSI is coming back to test that 61.8 level. And we've seen that in a couple of markets already. So resistance around this level on the monthly, failure to move above these two lines suggests that this breakout is a trap and that eventually the true direction is going to be down. We shall see, but I suspect as long as the market is showing resistance on these two lines, again, I still maintain the view that in the coming weeks, in the coming months, one should prepare to markets that eventually point down and potentially aggressively down. Eric Moade with Moade.com. As always, good luck. Peace. Peace and blessings. I am out. Enjoy your weekend. Yeah.